Welcome back, and it's time for the Word on Wall Street. Top investors watching your money. Joining me right now is StoneX Chief Market Strategist, Kathryn Rooney Vera. Great to see you guys this morning. Thank you so much for being here. Kathryn, kicking things off with you. We're looking at a market that is somewhat nervous this morning. It is a mixed showing. Fractional moves here. Dow Industrial's up 29. The NASDAQ down 36. But we did have some economic data out of China indicating weakness there. People are waiting for some sales in the Chinese market. Then you've got a big week on inflation data here. We've got the June CPI out on Wednesday. Economists are expecting prices to be up 0.3%, by the way. Year over year, prices are expected to be up 3.1%. And then we'll get the June producer price index out on Thursday, Kathryn. What are your expectations for the inflation data? And of course, this is all coming ahead of the second quarter earnings reports, which will begin to flow on Friday.
Yes. Inflation data will show a steep drop, but don't be fooled. That's simply because of base effects, Maria. So we're going to go from close to 4 to close to 3. I have 3% year over year. As you mentioned, that's 0.3% month over month. Goods inflation is decelerating. That's a phenomenal news item from the perspective of disinflation. But what continues to worry me is service sector inflation, and that I expect to accelerate for the month. And that primarily is driven by shelter costs. Housing, I expect to rise month on month 0.5%. On the flip side, you have the goods, core goods, which is going to be motored by a deceleration or a drop in new vehicle sales. So that's the good news. But I would say that this is something that's not going to deter the Fed. I do expect, and I think everyone at this point expects the Fed to hike 25 basis points in the month of July. I do expect that they're going to have to do one more rate hike by the end of the year at least to get inflation back to the 2% target, which it will not get to this year or likely next year, or even until we get, unfortunately, a recession, Maria.
Yeah, but I mean, look, Janet Yellen would not rule out recession, so we may very well be headed that way. Growth continues to come down. Do you still expect a recession year end?
Not this year end, but certainly by next year end. But we can't have that with unemployment where we are at. The labor market remains remarkably hot, and in an economy based on consumption, specifically of consumption of services, with the real wages moving higher and the unemployment rate so low, habits of consumption are not going to change. And unless habits of consumption change, we are not going to get that move lower sustainably to the 2% target. Yes, we'll bump around. We'll go to 4. We'll go to 3. This is going to be the lowest inflation print of the year. I do expect a reacceleration through year end. And I do expect the Fed to continue to hike to kind of win back its monetary policy, inflation fighting credibility, whatever it takes, which I think it will take recession because that requires a contraction of demand to get inflation back to the 2% target.
Kathryn Rooney Vera, thanks very much for the Word on Wall Street.